So welcome today to Wonderla Q3 Concall. As you know, Wonderla is amusement park operator, and they have parks in Bangalore, Hyderabad, Kochi, and a new park in Bhubaneswar, and they also have a resort in Bangalore. So opening remarks by the management, they did a successful QAP of 500 crore and best Q3 ever for Hyderabad, like highest quarterly revenue for Hyderabad park. Revenue is down 2% and footfall is down 3%, but ARPU is up 1%. So yeah, that's why revenue is down just 2%. And footfall is down in Kochi, Bhubaneswar, Bangalore, except for Hyderabad. They are doing a revamped website and companies on digital transformation. Then the Chennai park is expected to be open by December 2025. A resort in Bangalore is undergoing modification and it will be completed by this quarter, that is April 2025. And management says that long-term industry growth is still intact, yes, even though this quarter there has been a slight dip. So financial performance, if we talk, revenue was 1.27% down, EBITDA was almost 30.3% down, PAT was 45.7% down. This all has happened because they have opened a new park in Bhubaneswar, hence the fixed costs are more like manpower and other things, hence the dip in margin and profits. So if you see footfall Q3, Hyderabad is more than Bangalore. So Hyderabad is 3.28 lakhs, Bangalore at 2.9, Kochi at 2.57, Bhubaneswar at 0.34 lakh, and resort occupancy is at 52%. So first question was why the footfalls are bad. The company says that sudden unexpected flood in Bangalore for 2 weeks disrupted the, like, many people were not coming. And in Kochi there was this issue of meningitis, because of which the group footfall was down. That is basically school trips and other places were down, because meningitis is a brain eating amoeba which is feared to be spread through swimming pool. So that's why the dip in Kochi. Then there was cyclone in Bhubaneswar, and the whole idea of going to amusement park in to winter in Bhubaneswar is new, so they are basically creating a new category here. And then the footfall were down because of factors outside of their control. And yeah, the company said around almost 1.3 lakh footfall decrease was because of bad weather related issue. And group footfall was disproportionately high in Hyderabad, because like it was 42% this year compared to 36% last quarter, hence the very high footfall numbers which is there in Hyderabad. And then the slowdown in discretionary spend is another reason for this. Then the company, what steps are they taking to increase the footfall? So the company is doing incremental capex, like introducing new visual treats like Adventures of Chico in Bangalore and Hyderabad, and incremental capex happening in older parks like Kochi and Bangalore, where the footfalls are becoming stagnant. Then they're adding large virtual attraction in Bangalore, and newer restaurants with more variety of menu and food options will be introduced in older parks. So 10 lakh footfall mark for mature park, is it possible? This was the question. So the company said yes, it's definitely possible. Only because of weather related issue there has been a shortfall. And yeah, so then the next update was Chennai park is supposed to be open by July 25, is delayed by 6 months to 25 of December. And MP and UP government are very supportive, so we can expect parks to come next there. So MP is already finalized. Then they say that 5 years time is required for a new park to be stabilized and to become a mature park. And cost of setting a park is 200 crore for small city and 500 crore for major city, because land cost is very high in the major cities. And this cost, out of this cost, 60-40 split for rides and buildings. So 60% will go for rides and 40% will go for buildings. And even in rides, half are in-house manufactured and half is imported. So the company has in-house manufacturing. and then 5 to 6 lakh footfall is expected from Bhubaneswar once stabilized, is what the company says. And this year it was like, as of now I think it was 1 crore, so sorry, 1 lakh, and it might become another 30,000 might be added in Q4, and it's a weak quarter. And the company says for break even, like on the park level, they need 2 lakh footfall, which they are confident will happen by next year. And they are expecting in Chennai park a break even to happen within 1 year of operation. Then one person asked where are they planning to use the QIP. So 50% for Chennai and remaining for Bangalore and other older parks is what the management said. Then what is the strategy for long term? So the company says things out of control, they can't do anything like weather and other things, but they are doing whatever in their control, like expanding to more geographies so that to hedge their loss in other parks. Like now Hyderabad did well and others did bad. Let's say they had two more parks and three did well, three didn't do bad, so quarter results would have been stable. So things like that. And they're expecting more online footfall so that they can have plan properly and have minimum footfalls. Then they are planning to add newer attractions at the existing park, and then try to get more people to spend more on food and beverages in once they enter the park. Then they are going towards dynamic pricing model like aircraft, like how they do for flights. Like if there are some 100 people, for first 100 people they'll keep one amount, then it will increase for every 100 people subsequently who come, so that people will come even on weekdays, and it will be a good experience for everyone. Then the company said repeat customers are 30 to 40%, and over the same year the number of people who have repeated will be like around 10%, less than 10%. Then they're targeting EBITDA margin of 35 to 40% for in the long term. During after post COVID, because of pent up demand, their margin was little higher, like 45% and all. But they're saying it will be 35 to 40%. And then they're expecting 9 to 11% CAGR growth in non-ticketing revenue. So they're saying that ticketing revenue is not, they don't expect much growth from there. Only from non-ticketing revenue, that is food and beverages, they're expecting the high growth. And their new park, MP Park, it will become somewhere between Bhopal and Indore, and capex will be of 200 crores. If you add population of Bhopal and Indore, it's equivalent to almost I guess around 1 crore. I think so, yeah, around 70 to 70 lakhs to I think around 1 crore. So yeah, it will be like adding one more tier, one city. So it will be a good strategic strategic location for opening the park, and it will help in hedging the results. And weather is pretty constant there also, so yeah, there shouldn't be much variation in that park. And yeah, so the company prospects look really great. And but because it has run up so much in past, if you see history of this, they usually run a lot and then they consolidate it for a very long time. So yeah, think and enter into this stock. Thank you.